Today, let's ask the question, what is inflation? Inflation is a fundamental economic concept that refers to the general increase in the price levels of goods and services within an economy over a specific period. It erodes the purchasing power of a currency, meaning that, with inflation, each unit of a currency buys fewer goods and services than it did before. The Consumer Price Index, or CPI, and the Producer Price Index, PPI, are common measures used to gauge inflation. CPI reflects the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services, while PPI measures the average change over time in selling prices received by domestic producers. Several factors can contribute to inflation, including increased demand for goods and services, rising production costs, or supply chain disruptions. Central banks and policymakers closely monitor inflation rates, aiming to maintain a stable and predictable economic environment. There are different types of inflation, including demand pull inflation, which occurs when the demand for goods and services surpasses their supply, leading to an increase in prices. We also have cost push inflation, results from an increase in the cost of production, such as rising wages or higher raw material prices, causing producers to raise the prices of their goods and services. And there's also built-in inflation, also known as wage price inflation. It occurs when workers demand higher wages and businesses pass those increased labor costs on the consumer through higher prices. Moderate inflation is generally considered a normal and even desirable aspect of a growing economy. It encourages spending and investment, provides flexibility for interest rate adjustments, and can reduce the real burden of debt over time. However, high or hyperinflation possesses significant challenges, leading to uncertainties, distortion in economic decision-making, and potentially harming the overall stability of an economy. Central banks, such as the Federal Reserve in the United States, often set inflation targets as part of their monetary policy. Striking the right balance between stimulating economic growth and preventing runaway inflation is a delicate task for policymakers, emphasizing the importance of managing inflation as a key component of overall economic stability. Please note, while we may discuss finance, investing, and money on this channel, this video should not be considered financial advice. When investing or making plans for your own financial security, please seek the guidance of a licensed professional capable of making more informed decisions. If you make a financial life decision based upon the content of this video or channel, then please do so at your own volition and at your own risk. This channel and the people associated with it should not be held liable for your investment choices.